The dollar just slipped to a 5-week low, and while most people aren't paying attention, silver just triggered one of its strongest breakout signals of the year. This isn't hype, this is a rare moment when currency weakness and commodity strength collide, and what happens next could surprise everyone watching financial markets. As the dollar loses momentum, silver is stepping into the spotlight with rising demand, stronger chart patterns, and renewed global interest. This intro breaks down why this shift matters, how industrial demand is fueling the move, and why analysts believe this moment could shape the next big trend in metals. The story unfolding right now is bigger than most investors realize. The financial world just witnessed a shift many analysts have been quietly expecting. The dollar has fallen to a 5-week low, and at the same time, silver has shown one of the strongest breakout signals this year. This isn't a coincidence. When the dollar weakens, investors often rotate into hard assets, and silver becomes one of the first places money flows. But this time, the reaction is even stronger because silver is gaining from both investor demand and rising industrial needs. This combination is rare, powerful, and historically leads to major price moves. And what we're seeing now looks very similar to patterns that appeared before previous silver rallies. The question is, how big could this move get? Keep watching, because the next chapter reveals exactly that. Whenever the dollar loses strength, global buyers look for assets that preserve value across borders. Silver has always been one of those assets. But this year, the impact of a weaker dollar is amplified. Importers, manufacturers, and investors now get silver at a relative discount, creating additional buying pressure. Meanwhile, many countries are increasing diversification away from dollar-denominated assets, which indirectly boosts metals markets. In addition, silver becomes more attractive to large institutions during currency dips because it offers liquidity and long-term stability. All of these forces are now converging at the same moment. Historically, when these conditions align, silver often enters multi-month uptrends. But this time, there's an even stronger force building behind the scenes, and that force is industrial demand, revealed in the next chapter. Silver is no longer just a precious metal, it's one of the most important industrial materials in the modern economy. Solar panels, electric vehicles, medical devices, AI hardware, and even battery technologies all depend heavily on silver. Over the past year, global industrial usage has hit record highs, and production has struggled to keep pace. This mismatch between supply and demand is quietly tightening the market, even before investors start buying in large numbers. Now, combine this industrial pressure with the falling dollar, and you get a perfect setup for a powerful breakout. Industries simply cannot function without silver, and they will continue buying regardless of price. This growing industrial dependence is the hidden engine behind silver's rise, and it's about to get even more intense, as you'll see next. While demand hits new highs, global silver supply has been shrinking. Major mining regions are producing less due to cost pressures, lower ore grades, and fewer new mining projects. Recycling levels are also declining, meaning less secondary silver entering the market. This creates a tightening cycle where demand climbs while supply stagnates or falls. When supply crunches form in metals markets, prices often adjust sharply because even small shortages can cause outsized jumps. Analysts have warned for months that silver is entering a supply deficit, and now those warnings are becoming reality. This deficit is one of the strongest signals for long-term upward trends. But there's another powerful factor investors are watching: technical charts, which are now flashing a rare bullish pattern. Don't miss what's coming next. For traders who rely on charts, silver just delivered one of the clearest signals of the year. It broke above a key resistance level that held for weeks, accompanied by rising volume, a classic breakout pattern. When technical momentum aligns with fundamental strength, rallies tend to last longer and move faster. Even more interesting, silver has formed a higher low structure, indicating bulls are stepping in earlier each time. This pattern historically precedes prolonged uptrends. Indicators like RSI and MACD also show rising strength without overheating, suggesting there is still room for growth. but technical signals are only one piece of the puzzle. To understand how big this move could become, we need to look at investor behavior, and that's exactly what the next chapter uncovers. Institutional interest in silver has been rising steadily, but quietly. Large asset managers have increased allocations to silver ETFs, and trading volumes in futures markets have picked up significantly. Retail investors are also returning, especially those looking for alternatives as inflation stays persistent. Search trends, trading app activity, and market sentiment indicators show growing curiosity around silver even before mainstream media begins covering the surge. When investor demand begins building early, it reinforces every other bullish force. This creates a chain reaction. Institutional buying strengthens the trend, which attracts more retail investors, which pushes prices even higher. But the real acceleration happens when media headlines catch up to the story, and that acceleration might be closer than you think, as the next chapter explains. Many analysts who were cautious just months ago are now shifting toward bullish silver forecasts. Reports highlight the combination of industrial demand, supply deficits, and the weakening dollar as a rare setup. Some analysts even compare the current environment to early phases of previous silver surges. While predictions always vary, the growing agreement among analysts signals that the narrative is changing. And once sentiment turns positive, it often fuels even more momentum. But here's the key. Analysts aren't calling this a short-term spike, they're highlighting a structural shift that could last months or longer. Their projections suggest that silver is entering a new cycle of strength, and the final chapter explains what this means for viewers watching right now. The combination of a weakening dollar, rising industrial demand, tightening supply, bullish technicals, and growing investor interest creates one of the strongest environments silver has seen in years. This isn't about hype, this is about recognizing signals that historically lead to major market movements. Silver's breakout may just be beginning, and the next few months could determine how big this trend becomes. For viewers, understanding these signals early offers clarity in a rapidly changing global market. Whether you follow metals closely or are learning about them for the first time, this moment deserves attention. And as we move into the closing, you'll see why staying informed matters now more than ever, so don't miss the final message. As the dollar hits new lows and silver begins a breakout that analysts have been watching for months, one thing is clear: we're living through a major shift in global finance. Whether this becomes a short-term surge or the beginning of a much bigger cycle, staying informed right now is more important than ever. That's why channels like Money Timeline exist, so you never miss the signals others overlook. If today's breakdown helped you understand what's happening beneath the surface of the markets, then make sure you hit that like button, because it tells YouTube this content matters. And if you want more deep, clear, and guideline-safe explanations of global money moves, commodity cycles, and upcoming financial trends, then subscribe to Money Timeline and turn on notifications. The next few months could be filled with surprises, and you'll want to be here when the next big shift begins.